Yo, what's going on, boys? It's Charlie here with another video. Today's going to be a trade recap on gold, which is one of the trades I took today. It was the only trade I took. There was a few other positions that did pop up, so I'll go over those and I will show you my thought process behind those trades, why I didn't take some of those trades. I'll show you the thought process behind the gold trade I took, where I took TPs at, and why I took TPs there. 1 to 4s did indeed fail on this trade. I'll show you guys my thought process behind it. A lot of it was a heavily fundamental news driven trade. I will say that 100%. So it did have a lot to do with messing with the markets a little bit. Very volatile trade this morning after New York Open especially. So yeah, that's pretty much it. I will pull up the charts. I'll show you guys everything about today, specifically the trade, and yeah, how I hit it on 350K EVALS, my CFD account. I did hold to a 1 to 4 for those rolls. You can shoot a lot higher, especially since there's really no consistency roll. So that's what I did. That one didn't obviously hit a 1 to 4, which, oh well, no big deal, but I'm mainly concerned on these futures accounts right now. So that is my top priority. So yeah, I'll show you guys my kind of strategy in case you're new. I'll show you like how I trade, rough outline of it, and then I will show you guys the charts. All right, here we are, boys. So this is on gold. So in case you are new here, rough outline of my strategy. Now this is, again, very rough outline. There's more in depth to this, of course, but trade within trend, right? Price, we know, put in these higher lows, consistently. We wait for a price. Now, keep in mind, internally, there's going to be a bunch of higher lows as well, but we wait for price to sweep a recent low, stop those orders out, pretty much react off of a key level to the left. And after, again, sweeping the liquidity, stopping all these orders out, having a good rejection from a key level to the left, that is when we look for an entry signal. If we get our entry signal showing there is buying pressure there, then we take the trade and continue with the trend. That is the rough outline of our strategy, okay? So, of course, there's stuff that goes into it on a deeper level, but I'll show you guys this trade. So let's pretty much start it from scrap. So gold, very bullish. Non-stop been very bullish, okay? It's 9 chances out of 10 is going to be very bullish 2026 as well. But year over year, you guys can see the seasonals down here. 2025, amazing. Even 2024 is mostly bullish for the whole year. You know, we've seen at the end, got some consolidation, some downwards movement, but 2026, off to a great start, just crazy bullish momentum. So, like I said, we're looking at price and we're looking at these swings, right? Price makes swing highs, swing lows. You guys can see. And eventually, you'll get to a point where price retraces, sweeps the last low, and taps into an area that is that caused bullish movement, which is, you know, obviously like a demand zone or something like that, and target the long side. So that is kind of a rough outline. So if we go into specifics, we have a lot of accumulation here, right? A lot of sideways movement where price did end up pushing off of to the upside and then leaving like this level of liquidity here. We have 3 lows right here, lots of stop loss orders under here, especially people getting in buys. Where are they going to put their stop losses? They're going to put their stop losses under the latest low, okay? So price continues up, does whatever it wants. And I will get into this point here. So let me draw this demand zone first. So we draw this demand zone just off this bearish candle right before we led into bullish movement, okay? And this right here, we have this level of liquidity, beautiful level of liquidity under all these lows, under all this sideways movement right here. Price came down, looked like normal retrace, right? Price came down, started putting in bullish levels. We started taking out highs here. And what did it do? I mean, boom, straight down, selling pressure, right? Selling pressure, super hard, stopped all these orders out here, reacted off this level of accumulation, which again specifically is this demand candle right here. Beautiful rejection, 6 o'clock candle, so this was an hourly candle. We came down on this candle, 605. This was valid for a flip. I will say though, if you watched it live markets, I don't even think anyone would be able to get a flip entry on how fast that candle flipped. If you did, congrats for you, because I saw that thing flip in like half a second. But waited for candle close. Again, don't FOMO in. Don't, try to get in because you're greedy or something like that, because if you did, you could have got filled in the whole way up here. So it's very important. Just stay patient when you don't have your entry model. Our next entry model here is A, flip. If you miss the flip, you miss the flip. Or B, break of candle. Obviously, you're not going to be entering break of candle here, as the break of candle is the whole way up here. So what's your next one? A, you can wait for price to come down here and maybe get closer to your initial flip entry to get an entry in there. But ask yourself, if price comes down the whole way down here, after putting in this massive upper wick, do you really feel confident in that candle right there? Probably not, right? So I've just waited for candle close. Most, basic patient thing you could do, right? So candle close entry. Enter this position. Stop loss under the wick, standard. And again, thought process. Trending bullish, you have this level of liquidity. So this is your main level of liquidity here. So this is the main core concept of this strategy. Again, demand zone, price ran up, put in some lows, continued up. Looked like it was going to continue trending bullish, right? Looked like we just kind of reacted from this demand zone here to the left. Price started pushing up. We just took out most recent highs, and guess what we did? Boom, faked everyone out, swept all these orders that people initially thought this was a normal demand zone, all these stop loss orders under here, all these previous stop loss orders under here, and buyers got in at this previous accumulation zone right here, which is, again, that specific demand zone. Price pushed up off of it. So during this trade, managing this trade, what did I do? I saw a few things. So to start, I should have took a video of this because I knew this was gonna happen. I knew there was buy side liquidity right here. Mark this out. And there's a bunch of even highs, right? There's all these highs. This is the main high. I knew, I had a feeling price was gonna come up, sweep this buy side liquidity, and just reject, because we have this beautiful supply zone right here. And what did we do? We exactly rejected spot on to that. Couldn't have rejected any better. So boom, straight rejection to the downside, right? Now at this point, I'm not gonna lie to you guys, my 1 to 3 was the TP literally was on that top wick. It just didn't get stopped out. Now it got stopped out on my alpha futures account, but my two top stepped accounts did not. So that it sucked. So it is what it is. I saw that price swept liquidity right off to the downside, another retracement. Well, at this point in time, after seeing that, 100% honest with you guys, I was gonna go break even just because of how close we did truly get to TP. I'm usually a stop loss or take profit kind of guy, and I was like, being that close to take profit and it's just coming down with lots of volume, I might go to break even. So before I did that, I analyzed and I was like, you know what? I'm not going to do that. Why? Because you have two even lows right here, right? Price is coming down, and I started looking more into what makes price move. I started studying liquidity concepts a lot harder recently over the last like month or two, I'd say, and started realizing price is coming down. If we set stop loss at break even, what are we doing? We're letting this liquidity sweep that are under these two lows, when there's stop orders sitting right under here for these people that's getting in these trades right here. There's stop orders right here. If I take my stop loss, put it at break even, what's it gonna do? It's gonna wick me out. Okay, so I was like, you know what? No, I'm not gonna do that because of such obvious double bottom lows there for liquidity to take. I'm just not gonna do that. I'm just gonna keep my stop loss where it is, right? So sure enough, price came down, swept liquidity, continued to the upside. We did have another retracement here, and that was what? Yeah, that was New York Open. So you can obviously expect lots of volatility on that. But you guys can see how literally market just moves to the next side of liquidity. You guys can see we had a retracement, swept this main liquidity. Where are we targeting? Buy side liquidity right here above these highs. We just wicked above, rejected off this zone right here. Now, we retrace. Where are we retracing to? Well, there's not too much liquidity besides these clear double bottoms down here. Price comes down, boom, sweep liquidity. Where are we going now? Now we have buy side liquidity up here, boom, sweep liquidity. And did we sweep these highs? Yeah, we did. We literally, like, you can't make it up. It's literally just sweeping orders, sweeping orders, sweeping orders, even if it's by the tiniest amount. And that is why when it was retracing, it did suck, because obviously you miss your take profit by like the smallest amount. It sucks. It happens to everyone, whatever. But again, if we didn't have these two lows right here and we just had our normal, like say we just pushed off like this, okay, and then we did that, we had no liquidity sitting here and price did come down, I'd be fine with going break even, because what liquidity next is left to sweep? Our low, which is our stop loss. We don't want that, right? So only reason, again, I didn't take it to break even was because, hey, there's clear liquidity right here. Price is probably going to target and take that before anything if we continue to the upside, right? That's exactly what price did. So kept it at, kept my stop loss where originally it was, and it did that spot on. Came up, obviously hit our take profits, and we swept this. And if I remember correctly, this was a lot of fundamentals was moving this market right here. So I can't pinpoint out. I'm not trying to say news messed this trade up or anything like that, but there was a lot of conflict going on. Trump had tweets out. We just had red folder CAD news, and there was something else too, if I believe. And it just came down. Again, you can see, you guys can clearly see this. Let me just mark this out. That's our buy side liquidity. Price comes down. Where's our next level of liquidity? Cool, we have liquidity under here. We also have sell side liquidity right here. Boom, swept liquidity. Continues going up. Like, you guys can't make this up. And you guys can see it even right here. What's price doing? Continuing up, putting in higher highs, higher lows. Price retraces. What liquidity are we taking? Well, there's two clear major lows right here. Price takes the major lows and continues to the upside. It's all liquidity based. It's all taking highs and lows. And this is what I've been trying to perfect on most recently. It's very hard. It's not easy by any means, and it's not always right by any means. That's what makes it even harder, but it gives you a very good understanding of the market. Yeah, that's pretty much all I can say. 1 to 3s, I was targeting that because obviously with the consistency rule on Top Step, their top trade that they recommend is $1,500, which is a 1 to 3 risking 1%, which is $500. Obviously 500 times 3 is 1,500. So that was what I was doing for this trade, was targeting a strict 1 to 3 because of, again, their consistency rule on evaluation. So that's why I did that. And I also knew originally, before this was going to happen, I literally knew, I was like, I bet you we take that high and reject off this. And if we reject off that, it's not going to be looking good, right? And that's why I was going to get a break even until I realized, wait, we do have buy side, or not buy side, sell side liquidity right here, right? There's two double bottoms. Next one, yes, is our major low, but price swept those two orders, continued in our side. Again, if we didn't have these and we only had this was the last straw of liquidity. We took buy side liquidity and price starts retracing super hard. What's the next liquidity level for us to take? It would be ours. It would be our stop loss, right? But we didn't have that. We had these two major lows, so I just stayed in. I was like, okay, that's like our last straw. Maybe we will take those two lows and continue to the upside, and that is what we did. So that is some very, very deep analysis behind that trade. But yeah, that's pretty much it. I went over everything I can even think of. That's even, again, I was saying the exact same thing here. Like, our strategy popped up literally again, except it just didn't close exactly how we wanted it to close on a demand zone. But you can see the outlining of the strategy. Price trending up, it gets super overextended, boom, takes out all these orders right here, and then continues to the upside. It's the same thing over and over again. But yeah, that's the thought process behind that trade. Yeah, so we'll see what we get for the rest of the week. This was taken on, yeah, you guys can see the date. I think you can see the date at the bottom corner, but it's the 28th. It's Wednesday right now, so we have Thursday, Friday. We'll see if we get any more trades, but yeah, super happy with this trade. I will show you guys the other trade we had today. Wait, I think there was actually another gold trade today. I would not mind going over that real quick. Oh yeah, right here. This was a valid trade. It is a valid trade. There's nothing wrong about this trade. It's just, problem is you kind of get this with more market experience. It's like you're trending up for so long. You guys can see how small these retracements are, right? You can see how absolutely tiny these retracements are. That might work right there, right? Gosh, that might work, that small retracement. But with it trending that much of a straight line, you guys can see that straight line I'm pointing out. That much of a straight line over and over again, eventually we're gonna have a deep retrace and sweep out all these levels of liquidity. And that's what we did. This trade, there was nothing wrong with that. It wasn't in my session. It was too early for me. It was 3:50 in the morning for me. But that's my thought process behind it. Yes, you can take the trade, but it's just like, I don't really like that trade personally, because you know, look, sooner or later, it's not going to trend literally like damn near in this perfect line forever. You know what I mean? Eventually, we are going to have a big correction, stop out all these orders, and this is where you get the biggest movements from. So yeah, that's my thought process behind that trade. But I'll show you guys this NAS trade. Now, this NAS trade was in my session. I watched it perfectly. Where was this trade at? Okay, it was here. This, I was just testing something out, but I'll show you guys exactly my thought process. So SMT, I don't know if you guys are familiar with that. SMT is pretty much when two correlating assets is diverging. So NAS and ES is super correlated. When NAS 100, and this can be used in a lot of stuff. I used to use this in crypto when I used to invest in crypto for like Bitcoin and like altcoins and stuff like that. It used to work really, really well. So SMT is pretty much divergent. So what it means is, say we have a high followed by a higher high, and then the pair that is highly correlated with, which is the S&P, NAS made a higher and then a higher high. S&P made a high and then a lower high, right? So we're having bearish divergence. It's diverging to the downside. If it was the other way around, if S&P 500 was putting in a low, I'll just draw it out for you guys. If we're putting in a low and then a higher low, it'd be bullish SMT. So yeah, side note there. But anyways, going back to it, I saw this, was like, okay, we could probably expect bearish movement, right? So what we saw here was a demand zone. Demand zone followed by some pretty strong liquidity, including this right here. Now, price did fail to close above this, but we did have strong liquidity, right? There's going to be liquidity under this high right, or this higher low right here, and this higher low. Especially since this was kind of more of a little bit of some consolidation right here, right? So what main thing that threw me off is the bearish SMT. I will be honest with you guys. I started using SMT. It kind of works really well, I'm not going to lie. Just recently, but yeah, that kind of threw me off. And another thing is I recorded a video. I will show you guys. Actually, I will. I'm gonna pop it up on the screen. As much as it's gonna be a pain editing this, pop it up on the screen, but I'm gonna pop it up in the screen for you guys. I'm gonna show you guys. I was recording video, and I was like, this bearish SMT, I bet you we sweep all this liquidity, you know, like we might tap into this demand zone, whatever. And sure enough, it literally did as I was recording, which is absolutely hilarious. But I'll show you guys the video right now. We have bearish SMT on NAS 100, right? So technically meaning NAS is putting in higher highs, while ES is putting in lower highs. This is bearish SMT. I expect price to move down from here, okay? Because of this and there it goes. I was just going to say, and I bet you we tap into this demand, sweep this liquidity right here. Yeah, okay, so once you saw that, what ended up happening was I was watching that live. It happened so fast, and I watched price come down, take out all of these orders, miss our demand zone, and after that video, it came up and just about flipped that candle. So, thought process behind it. Okay, well, our main core of this strategy is looking for liquidity sweeps, driving price down, and then as soon as it takes out all these orders, where is price going to be reacting from to continue to the upside, right? That's where we draw out demand zones, right? Reacting from demand zones. It reacts from fair value gaps too. It reacts from anything, right? We just have strict specific rules of drawing a demand zone, right? So price comes down, sweeps out all of these orders and taps into our demand zone and continues up. Well, what did price do right now? It swept all of the orders, missed our demand zone, and went up to the upside, right? It swept out all of these orders. So if it swept out all of these orders and then came down and tapped through like 2 candles later, what's the point of entering? Because it just did the main thing that we look for in the strategy, which is a strong liquidity sweep and catching the reaction to the upside. It just did that, and you can clearly see that it failed. So why would we be entering here when we just had the main move of our strategy? It's stupid. So I personally, I didn't take that trade. I know some people did. It's when you look on a rule book of our strategy, like a specific, if you have a checklist sitting in front of you and you note everything down, is there liquidity? Yes. Are we trending higher? Are we taking out highs? Yes. Did price come down? Did price give us a valid entry candle? Right here. Yes. Boom, boom, boom. Take the trade. But with market experience and what I'm kind of going through right now, I truly do feel like I can look at these charts and kind of decipher, even though everything checks up, what I rather take compared to what I rather not take. You see what I'm saying? If you're going through a checklist, yes, this is valid to take. But if you just put a little more thought into it and you use a little bit more market experience of seeing these charts play out over and over again, you kind of realize what is happening, okay? And a lot of it has to do with liquidity. Again, that is the main point of our strategy right there, is to get a clean liquidity sweep and then try to predict precisely where price is going to react from after that liquidity sweep and stopping out those orders. When we just had that and price retraced the whole way to the upside, well, it just did our strategy and it didn't tap in our zone. So why are we going to wait 10 minutes later and then tap and then take this trade when it just did the main core part of our strategy, which is take out orders, right? So that was the deepest explanation I can even think to give you guys. But yeah, again, I started looking at this bearish S&T too. This is very useful. This just happened on this other trade right here. This trade, a valid trade to take. So what was this? 7:30. Okay, so this is a 30-minute candle. You can take a flip here. Yes, you can. You 100% can. I'm not a fan of how we didn't tap into the zone too deep, but I do like how we did just take that liquidity by a literal like 2 pips and go to the upside. I do like that. But stop loss would be under there. But I do remember, yeah, we just would have missed a 1 to 4 barely. So behind this trade, another thing, just showing you guys this SMT. Let me pull it up. Where is it? It was right here. So this was yesterday. ES was making a high and then made a higher low. Gosh, a high and then a lower high, while NQ was making a high and a higher high. This is bearish SMT, right? So NQ making bearish SMT. What are we going to do, right? We're most likely bearish because of the divergence between the two, right? Price comes down. Okay, well, cool. What's the liquidity that we're going to sweep to continue to the upside? Because 9 chances out of 10, NQ is going to continue trading to the upside, right? And I could be wrong, but look at the trend. You know, with it being bullish, it's probably going to continue to the upside. So you have to ask yourself, what level of liquidity are we going to be sweeping? Okay, cool. We have this level of liquidity, but with bearish SMT right there, do you really think that's enough, right? Where's the main liquidity? Well, we do have literally equal lows right here, followed by taking out highs. Where is all of these people going to most likely be placing their stop orders? all under here, right? And then of course you have stop orders here, stop orders here, stop orders here. What do? Came down, swept out every single possible stop order there is. I guess you could say kind of reacted from this level to the left, and then boom, straight up. It's literally, it's all liquidity based. So if you can just kind of figure out where we are in the market to help you for LSD, I truly think that's a big game changer. I'm low-key dropping way too much sauce here, but yeah, that's kind of what I've been doing for the last couple weeks, is looking more into this stuff. Why is price moving the way it's moving? What liquidity should we, like, are we going to move to next? And if you look at again, basic stuff, you have a checklist in front of you. You're looking, okay, for our strategy, we want to be trending higher. Are we trending higher? Yes, we're taking out highs. Do we have a level of liquidity? Yes, we have a level of liquidity. It's right here. Price took out highs. Price came down. Swept liquidity. Now, I can't lie. This sweep liquidity, I really, really like. I like how we just literally, like, liquidity was super low to our zone. We just swept those orders out. Immediate bullish movement to the upside. I like that, right? But you have to look out and be like, bearish SMT. You know, and these aren't just tiny little, it's not just like the SMT is just some like tiny little higher high, like random. These are big, massive bullish swings. Okay, this is massive SMT. Okay, it's massive divergence. I'm not the only person seeing this. A lot of people are going to be seeing this. A lot of people are going to be shorting the market. And guess what? A lot of people are going to be targeting this liquidity to the downside. The sell side liquidity sitting right under here, literally double lows. What did price do? We did get an initial reaction, right? We swept our liquidity initial reaction, but then what did price do? Continuing, just swept out liquidity to the downside. We had this bearish SMT. I didn't personally take this trade. And yeah, that was kind of what happened there. Now, if you would have taken 1 to 3, 1 to 2, I know people that do that. Yeah, you would have smacked that trade. Like, you know, good work. But yeah, if you're targeting the 1 to 4, which we know makes more profit year over year because of my back testing, then it would not have hit on this. I will fully admit it did not hit on this trade. It did not hit on this gold trade today. But I know, I am certain on the fact that at the end of 2026, 1 to 4s will outcompete 1 to 2s 100%. Now I get it. 1 to 2s, yes, they do have a higher win rate, okay? And if you're trading futures, yes, it might be more easier to take 1 to 2s. Me personally, the 5 trading days, I am willing, again, I will test this out. If I don't like it, I'll change it. But for now, I am willing to be patient enough to just hit 5 1 to 4s. Whether losses, obviously losses are going to be in between. But if that takes me a month to hit 5 1 to 4s, so be it, right? I'll get those 5 profitable trading days and I will request a payout. That is just me because I know that those 1 to 4s make 3 times as much profit at the end of the year than 1 to 2s do, right? So if you can just have a little bit of patience and wait for those 5 trading or 5 1 to 4 days hit, then you can get paid more in the long run. And I get it. I get if you want to aim for 1 to 2s because they can happen really, really quick and you can get a payout faster. I'm just saying for the long run of things. That's just me yapping. Everyone has their own opinions. I am subject to, I can completely change that opinion if I want to, right? But yeah, that's pretty much it. Here's this other trade. This wasn't even in my time zone. This is after NQ volume kind of dies down. You can see this is honestly kind of a good trade, but like you can see why we don't trade at these times is because it's just not really liquidity driven. I say that as there's a trade in 16. What is that? I don't know what time that is. I can't think, boys. But again, I'll just quickly go over this because I'm just trying to help you guys. I really don't care. Demand zone. What do we have? Bunch of accumulation, kind of to the upside, right? All of these orders. Accumulation, manipulation to the upside, and then distribution to the downside. It's literally, and you can name it that way. That's like a power of 3. That's like an ICT concept. But like, or you can just look at it as liquidity, supply, and demand. Okay? There's liquidity here. Price is trending higher. yes, or you can look at it as, hey, we have a bunch of not so sideways movement, but putting in higher lows with stack liquidity, and then we have manipulation to the upside, showing like massive breakout, and then just distribution to the downside, which is just smashing through all these levels of liquidity. When it comes back down, what are we reacting off of? A demand zone. Sweep all these orders, we get a bullish reaction, boom, up to the upside. What are we targeting? Buy side liquidity right here. Same thing over and over again, guys. But yeah, that's just kind of what I've been working on. That's my thought process behind these trades. That is pretty much how I made money today. To show you guys I'm not lying, I have 2 accounts right now. This one was in a little bit of drawdown. It's up now, and then this one, fresh account, up $1,500. $1,495 if you want to be exact. But yeah, I'm heavily considering buying more, and just because I know you can have 5 max at a time, and I'm really considering just buying 5, trading them, and if I blow them, I don't care, just buy another 5. Because just to get off an evaluation real quick and get on an express would be really nice. I might do that, but yeah, that's my thought process behind these trades. I hope you guys enjoyed this video. I hope you guys really actually learned something. I tried to give you guys as much information as I possibly can. But yeah, I dropped a lot of sauce, so I hope you guys enjoyed it. I will see you guys on, what is it? The weekly recap, Friday. So I will be going over this trade. I'll be going over trades we had Tuesday, Monday. I have a lot of value for you guys, bro. I promise you guys. So yeah, that is pretty much it, and I will see you boys on the next video. Thank you for watching. Peace.